TGIF, Kevin, and everyone else. How's everyone doing today? I believe I should start off with the pound. The trade was good for scalps only, and you should have had some opportunities from in here to book some partial profits off at this level here. This was yesterday. This surprised me. Probably didn't surprise some other people, but this strength did surprise me. So I want to start off by talking about the US peso, I mean the US dollar. Okay, so here's your 1 hour, as you can see, and I agree with Blake, divergence isn't everything. You need more reasons, and I'm not saying to go out and bet the farm on a dollar bottom here, but I just want to show you a few things here. I usually don't do new trades unless we have an NFP, an inflection point type potential with a major news event on Fridays, because normally the way you finish on Friday on a weekly basis, you get follow through into the next week. So here's your 1 hour beginning to diverge. Here's your 4 hour, not a great reading. Actually, a lot of negative momentum, but diverging. 1, 2, 3, looks like we'll have a throw over. I don't know how I came up with the number, but 90-90 may have been some intelligence gathering I was doing, but maybe it was Peter Temple talking about the potential for 90-90. We're almost there. Okay, and here's your daily. So as you can see, pretty glaring divergence, not a great reading. We're at 28, possibly a third drive developing. We could get a throw over into Monday. And then I started looking around the FA site, okay, and I noticed a new count in Euro by Grega. And this is one of the more reliable. Since I've come to ForexAnalytix, I've learned a little bit more about Elliott Wave following Greg and Steve. And this could be an ending diagonal, which a lot of three drives are ending diagonals. So I believe it happens near the tail end of a move. Three drives in the middle of a trend are not as effective as they are or could be near potentially the end of a trend. So Greg is looking for a little pullback, another push up. And when I go to the weekly Euro, just a little reference point here. So your daily starting to diverge here, but here's your reference point. You know, if you had deep pockets, you put a piece on and hope you're early and add on into next week. I know a lot of great traders trade that way. They don't try and be perfect. But check out the weekly, Warriors. 2153 is halfway back from the successful Draghi campaign to drive the euro down. Okay, so we are approaching a pretty important fib level. Then you tie in what Greg is looking at for potentially a ending diagonal, and then you throw in some three drive stuff here. And you know, you have 1, you have 2, and on the shorter term, 1 hour, same thing. 1, 2, maybe we pull back again and look for one more thrust. You may want to write down that number. Moving average 50 and 200. So we could get one more shot up for top picks into early next week. Give me a Y if you guys are with me on the analysis. So I think that it's getting real late, at least for not this part of the cycle, for pressing the short side of the dollar with some of the things I've seen and what Greg is talking about. I just wanted to point it out. Maybe you do some work over the weekend. Everyone has their own methods. As Jack Schwager told me, the most important thing a trader could do is find something that a trading style that suits their personality. And RSI and 3-drive work kind of suits my personality because always wanted to be around for turning points. Yeah, stock's looking weak. Yeah, sure. And throw in an 8.1 earthquake in Mexico yesterday. Mother Nature is pissed off. What do you think? Mom is mad because we didn't clean up our room. Right, Luca? Mom is mad. So these are some of my thoughts going into the weekend. I think the weekend is a great time. Oh, that too. Yeah, it's a bigger quake than good one, Luca. Bigger quake than Kim could generate with a hydrogen bomb. The weekends are a great time to lay out your trading plan for the following week. I believe, well, what could help you lay out your trading plan for the following week is, call me biased, but it's having access and going through all the different pairs and instruments that FA covers. Okay, so that you end up having a traffic light page because that's where it's happening. Everything, when you're driving and when you're trading, everything happens with a traffic light, doesn't it? Yes, it seems like revelations. Yeah. So everything's at your fingertips. Every pair, for people that are new here, every pair and different disciplines of trading, basic, technical, sticks, macro, Elliott, Greg won all kinds of awards. I don't even have to talk up Nick for her harmonic work. Steve on his sticks work and Stelios. So this would be a good time to sign up because all the adults are coming back from the Hamptons this weekend, you know, to watch the Hurricanes on TV and NFL football's on. The kids are going back to school. So we're going back to school next week, guys and ladies. And I really do recommend that you have all of this at your fingertips. Talk about the Aussie. Steve's been constructive, the Aussie. So your basic technical, here we are. Achieving some objectives, okay? Even at new highs, we're not confirming. So if you're never forced to trade any day, cash is also a position, but I think that there could be some possibly important turning points at hand. And one of my heroes, Paul Tudor Jones, who likes Kentucky Fried Chicken, right, Blake, said all the big money is made at the turns. But I'm sure you'll get an argument from trend traders because, you know, trends, huh?
He does.
He says that, doesn't he? He says that, or he likes Kentucky Fried Chicken?
No, he likes Kentucky Fried Chicken.
You know what? I do too.
Blake, you've met him, haven't you?
I haven't.
How about Steve?
I haven't. I have not.
Steve, they don't have that in Greece, do they? Fried chicken?
Actually, they do, but you know, Greeks are not much fans of fast food in general, so I don't think they're doing very well.
Short Kentucky Fried Chicken. Shorted.
Yeah, most likely.
Well, hey guys, aren't you glad it's Friday? I don't know. I mean, it felt like a 5-day week to me this week. I
am. I got not on top of not sleeping well. I got ran over by a freight train by the New Zealand dollar last night. So by the dollar in general, you know, yeah. It's hard. It's hard playing the dollar long. I've tried it a couple of times and, you know, unsuccessfully. Yeah. I don't know if I'm going to try doing it again, at least not today. So
yeah. You know what I love about you, Blake, is your transparency. You know, I mean, you know, the two biggest statements that people choke on Twitter is I was wrong and I don't know, because they think there's, you know, oh, people think I'm stupid. But, you know, the greats are wrong. You know, it's knowing how to lose, you know, and, you know, you don't come on here every day talking about, everything you do right. You always mention something you do wrong. And, you know, that gives people more of a realistic picture of what it's like to grind out a living trading. Like, there's someone in your country club room that says pipping ain't easy. It's not easy. A veteran pulled me aside when I first got my seat. They were staring at me like a fresh piece of meat coming into the pit, and pulled me aside and said, "Kid, this is a tough way to make an easy buck." And I don't know about you guys, I agree.
No, it is, and no, that's part of it, and especially when you try to go counter trend, it makes it even that much more difficult. But man, the dollar really exploded in a bad way. It exploded, like imploded. I guess maybe that's a better word I should use. It imploded yesterday, and I, you know, I got stuck in the crosshairs. I actually just, you know, sometimes you gotta compensate for things. You know, I'm a little different than I try to explain to you guys. You know, when I'm here, and you know, sometimes when I'm trading around, I have to trade for my P&L sometimes. So, right. You know, if I like, since I got hit, I got hit by the Kiwi, and I was doing a couple other trades too. I tried to buy the dollar Canadian last night, and that was really tough to do because I tried to buy it because I wanted to buy it ahead of today's Canadian jobs report. If I could have been nice and profitable. Unfortunately, you know, the dollar was sliding so hard. We came right into really key support last night. I tried buying this one too, and the dollar kept sliding. I was short the Kiwi. I got stopped out of that. I actually had to turn around and just this morning, just moments ago, like about 15 minutes ago, I closed out my euro pound short just to take some profits off the table to help minimize the losses. So, you know, even though I'm still
like
bearish.
Yeah, you did that with the Canadian too this week. I noticed that, you know, because you portfolio trade, that when certain things don't work out, like you were long CAD, but you were short something else that more than made up for being long the CAD before the rate hike. And, you know, a lot of people don't know that.
Yeah, I was short the New Zealand Canadian too. And
okay.
But I have to do that from time to time because, you know, for me, it's more of a trading of P&L or portfolio, if you will. But I'm like, I look at the euro pound, I'm still bearish. I'm still, and actually, if I can get an opportunity today to short it like 20 pips from here, I'm going to short it. So that I'm just going to, you know, reestablish my trade if it can get, you know, if it can bounce a little bit. You know, but maybe it won't. I mean, the euro pound, I mean, look at the daily chart. The euro pound, I mean, it came right up to trend line resistance and just reversed. You know, where, you know, the Kiwi dollar, I mean, this did an overshoot of an AB equals CD, and then I had my stops right around the highs, thinking, man, this head and shoulder pattern could still play out too. But because the dollar was just getting destroyed overnight, I couldn't risk it. You know, I had to adhere to my stops and let it get, you know, let it get stopped out. The unfortunate thing is, I think the more unfortunate thing is about what's happening right now is I think the euro pound's actually going to go a lot lower. And if you look at you look at the pound is just absolutely screaming higher. The data that came out last night, it was the manufacturing production numbers. You know, I think the market was really braced for weak UK data to come out, and the UK data has been not bad all week, and so that I think you had some hesitation early on, but and even last night you could see the pound wasn't following the rest of the currencies. Because if you were watching it last night, I mean, I was watching it while I was, you know, I got stopped out. I was not playing football. I was watching, you know, the season opener last night, which I still can't believe that the Patriots Lost. What a game, huh?
Yeah, it was a good one.
It was a good offensive show last night. Anyway, what's even worse about that is
Brady could lose. See, even Brady can lose.
Even Tom Brady lost. Yeah, I mean that was something. But yeah, you know what's even worse is I had this has nothing to do with the markets, and most of you don't even care at all. But I had the New England Patriots running back on the bench last night for my fantasy team because I've got Ezekiel Elliott playing because he's only going to play probably 1 week over the next 7. So I didn't play Gillespie. I didn't play. Yeah. Yes. Well, no, but he came in. He's in for LeBlanc. Anyway, make a long story short, my night was really bad last night, and then I couldn't sleep, and so it was a horrible night all the way around. I'm just TGIF. That's the way I have to look at it. But anyway, what I was trying to say is the pound wasn't following everything else. I mean, if you look at the euro last night, the euro was flying. Okay, so here's the euro flying last night, just in Asian trade. Boom, here we go. We take off. Aussie dollar, boom, we take off. Kiwi dollar, boom, we take off. Canadian dollar, just continued to get blasted last night. Swissy broke down last night. Here's the pound. The pound didn't go. The pound didn't move last night. It moved this morning after the data was released. Again, that was more of a situation of everybody who wanted to, well, anybody who was probably going to buy the cable had to wait till after the PMI data came out this morning. And once the PMI data came out, it freed up the market to buy the cable. So that's why the cable's been running, for the last couple hours, because the UK data came out at 1 o'clock, 1:30 in the morning, our time, where I live, where you live too, Dale. But once the manufacturing production numbers came out, okay, the market felt it was free to start buying cable again, and that's why the pound was so late to the party. And I'm happy that it was, because it helped me, like I said, it helped me compensate for my losses in the Kiwi overnight. But man, the pound is just basically joined the party. So here we are, we've got Canadian employment, and I have no Canadian exposure on right now, but I will tell you this: the Canadian dollar is absolutely destroyed. We are at a major, when I say major, this is really major here. If you take the lows from 2016 to the highs of this year of 2017, we are at 127% extension. We are there, okay? And I'll tell you, we are very divergent on daily relative strength. If we're going to bounce, it's going to be here. But I'll tell you, if it can't bounce, the dollar Canadian has so much further to go. And, I was willing to try to pick it up last night. I tried unsuccessfly, just to try to play it ahead of the report. See, what I was hoping would happen is I would have bought it, and I bought it last night at 120.90, and I sold it at like 120.80 or whatever. I didn't stick around long. I just tried to pick it up here on a fib extension, and then and I just didn't stick around because it just it dipped, and then I just got out of it and said forget about it. But if the Canadian doesn't stop here, the chances of the dollar Canadian going a lot lower are quite high. We're just very, very extended. And also, if you look at here, I got to show you guys this. Dale, are you still there?
Yep.
You got to see this. And I actually even put this in last night on our analysis here. Oops, that's not what I want to do. Give me 1 second. check this out. I don't know if I've ever seen a reading this high. Look at this. No.
Oh, Canada.
Canada, 95 DSI.
Wow.
I don't know if I've seen a reading that high. So today, when the Canadian data comes out, if the Canadian data is a slight beat, okay, so when I say a slight beat, we're expecting Canada to create 17,000 jobs, okay, today. Unemployment rate, we're expecting around 6.3%. If that data comes in line or slightly better, if the Canadian dollar pushes lower, and let's say it goes into one more low, I'm going to get long, just for intraday. I won't stick around. I can't. I've tried standing in front of this freight train a couple of times this week. I tried it with the Canadian, you know, here, lost money. You know, I'm just not going to do it. But today, like intraday, if that can happen, if I can actually, if we can get a new push to new lows on slightly better data, I will buy the dollar Canadian just to see if I can see some sort of intraday reversal to try to pick it up for, you know, 30 or 40 pips. Because I think it is overextended. I think it's a little oversold. So anyway, that's what I'm thinking. That's what I'm thinking right about now. Another big development, in my opinion, is gold. If you guys didn't see gold hit the 161% extension overnight. Oops, that's silver too, but silver's up against channel resistance. But you can see gold hit this. This is pretty big. We went from the low to the high of this summer. We hit 161% extension. We have stalled thus far. And that could be, you know, that could be a situation where gold starts to pull back and we start to see, you know, maybe the dollar finds some sort of footing. You had mentioned the U.S. dollar Mexican peso. I did try to pick. Well, I didn't try. I actually picked up some dollar peso. You know, right about where we're at last night, and I'm actually still in it because I'm playing against this channel support. So I'm already with you on here because I figure, well, if the dollar is going to start to bounce, it's starting to show its hand against like the peso, and I don't know if that's more risk aversion than anything, but I'm willing to pick it up. I was willing to pick it up here, and I am long a little dollar Canadian right now. So you know, trading it off the channel support and trading it off a trend line retest. I don't mind doing that, and I do trade these retests quite a bit. So even if it's from an intraday perspective, I don't know how long I'm going to stick around. But ooh, speaking of which, gold is coming under a little bit of pressure right now. You can see how it's starting to come under some pressure. And like I said, I think gold is walking a very fine line here because it has been quite bullish and the dollar has been quite bearish. But I don't know if you saw that DSI on the dollar. The dollar DSI is at 11 or 10 or something. So
what's the lowest you've ever seen the dollar? Right here on the DSI?
Right here. I think I saw it at 9 once.
We had it at 8 and 7 as well, just for a single day, Blake.
Was that it? I couldn't remember if it was that.
Yeah.
If that was it. How you doing, Steve?
I'm good. A little bit tired, mate. But yeah, the paradox with the dollar is that, you know, as we have said on the webinar as well, is that it keeps breaking like one support after the next. It has failed to break even a single resistance for a big period of time. And that's why we are seeing the DSI constantly oscillate between very bearish levels to bearish levels. But yeah, it has never broken above a bearish level since it's been now how many weeks, Blake? Many weeks, right?
It's been a long time. You know, one of the other big developments overnight is the dollar yen, and you know, we're seeing the dollar yen actually break down, and the stock market hasn't yet, which is really scary, because if you're long the dollar yen, I mean, and the stock market actually starts to pull back, this dollar yen could really get walloped, and that's pretty scary. Hey, Steve, can you talk for just 30 seconds, please? I got to set down the mic for just 30 seconds, please.
Only 30 seconds, Steve?
Oh, come on. Yeah. Honestly,
I'll be right back. Hold on.
why are you doing it?
That's an oxymoron, don't you think, Steve?
Oh, yes, it is.
I think he meant 30 hours. Can you talk for about...
To be honest, this was a 4-day week, but it's already feeling, I'm feeling like a 7-day week. So, today actually 30 seconds is fine. Okay, obviously,
that was it. You guys, you just spent the last 30 seconds talking about 30 seconds.
Yeah, because he started commenting about oxymorons.
I mean,
the pink flamingo guy is back. Here he is.
Oh man, it's Delios. How you doing, man?
I'm very good. Good to be back. Hello, everybody.
Hey, I tell you, that is one of the coolest pictures I've ever seen. Is that one that you have of you in Naxos? That was pretty cool. That I tweeted.
And I promise you, it was not photoshopped. It was as it was. Yeah.
That's awesome. That's awesome. Yeah. Hey guys, we have this Canadian data in just a few minutes, but Stelios, do you have any wise words for the weary?
Well, I was going to. I have a couple of charts to show, but I don't think I can do it before the data. So it's all about it's all about the dollar, and which I think is still driving pretty much every market. But
yeah. Well, since you said that, the dollar is getting killed, but. And you say it's driving the market. What's really interesting is we haven't seen a huge response in other things. Like you look at the S&P, you look at like the DAX, you look at, I mean, it's just maybe gold and silver.
Yeah, stocks are always an interesting one, but the way I see
artificially bid on. Honestly, they're artificially bid. I mean, just look at the central banks buying like billions and billions and billions of it. If we remove the central bank bid from the stocks, I very much doubt that we're not going to plunge from here.
Yeah, you've got the BOJ buying directly stock equity ETFs. You've got the S&P buying stocks directly. It's just, in my opinion, not proper price discovery. So it's difficult to trade stocks. That's why I'm not trading them. But what I wanted to say is that at the moment, Fed fund futures are now pricing less than one hike until the end of 2018. So they're pricing about 19 or 20 basis points, which in my view is now getting to a level where the risk is really for the upside for the dollar. So something might happen, somebody from the Fed is going to start talking hawkish, or a couple of consecutive data items coming out strong, and how sentiment can change, and from 20 basis points we can go to pricing 40. That's why
maybe the situation in Korea North Korea might de-escalate a little bit.
Yeah, maybe that too. You're absolutely right, and that's why I can share a couple of charts after the numbers. That's why I think the dollar is due for a bounce, and I drew some levels a year ago, and it's really there now, and I think it's going to be very important the next couple of weeks. I think we might see something. We might see a bounce.
What else is interesting? Stel, but before you go to the chart, is Trump wanted a lower dollar, and then everyone started coming out with the dollar always has problems under a Republican. Every Republican president, the dollar's gone down. Well, we found out yesterday that Trump really isn't, or 2 days ago when he made the budget deal, that he's a Democrat.
Yeah.
So so maybe the dollar and Trump reaching across the aisle might coincide with that dollar.
I have a comment to make about the dollar, but after the data.
We have Canadian data coming out right now, guys. Let's we're looking for 17,000 jobs to be created. Let's see how the Canadian responds here. Remember, I think it's really oversold. So so the data should be out, and we had 22.2. And it's still going higher. Look, it's still going higher. That's just showing you that it's very, very oversold right now. I think that
Nice call.
Weird response, actually. Yeah, from the market.
Yeah, I mean, it's
And
immediately.
the unemployment rate fell to 6.2 from 6.3.
So it's interesting, you know, that's just showing you that the Canadian is.
Yeah, the underlying data are bad, Blake, because we had an expected plus 35.1 to full time, and full time jobs came at minus 88, while we had a lot of part time jobs being created. So the underlying data are bad. A lot of part time jobs created and a lot of full time jobs lost.
I just saw that. Yeah, really interesting.
Same as most major countries, really.
Yeah,
right. I mean,
you
could argue the same. You can argue the same for like Australian data as well. And okay. Well, that explains things. So what's going to be really interesting is I don't know with this Canadian what I would be doing right at this moment in time, but I think if I was short, I'd probably be looking to cover soon. That's probably, you know, what I'd be thinking at this point. You know, so that and you can see here comes the dollar Canadian right back in, but I don't know if it's going to hold any of these losses that it's coming right back in here. So we'll see if we'll see. But if we get above this 121.25, I think you'd have to. That would probably force the hand of people to cover up some shorts here. If we get above like this resistance intraday, but we'll see. We'll see if we can. The dollar Canadian has been, you know, everybody's been using every opportunity to sell as often as possible. So, but guys, I'm gonna have to pass it over to you. And I know Stelios has some things to show. So
yeah, give it to Stel.
Take care of the rest of the 30 minutes, and I'll see you guys on Monday. No, I'm kidding.
No, because you know what, guys? Stel, I remember. Look, you know, we started our room in April, and all the way back in April, Stelios's macro was for about 92 to be retested, and he was spot on. So if he thinks that we're getting to an inflection point, pay attention to it. So is this your chart, Stel, where you might get a bounce from here to 96?
Yeah. I mean, this is obviously my opinion of the dollar. These are the trend lines and zones that I drew a year ago, I think, and I've been following this. And 3 weeks ago, I think I drew this this blue arrow going up, down, then up, and then down. I think this all coincides now quite nicely with the dollar recovery for all the reasons we talked about. And one of our friends actually wrote as a comment about North Korea, you know, if this situation de-escalates, like you said, Dale, as well, the dollar will see a bounce, I think, for sure. So,
well, Dennis Rodman offered to go over there and broker a deal.
Well, that's it. It's done then.
Yes, nothing to worry about.
Is that surreal or what?
I feel confident.
Yeah. So I think we're due for a bounce. On my chart, I put it towards 95, 96. Will it bounce that high? I don't know. It's possible, but medium term, I'm still not very optimistic about the dollar because they were hiking into an economy which is slowly deteriorating. I mean, it's still doing okay, but there's no way I think that, especially with things are at the moment, that the states, the U.S. can continue, driving. The world economy. So I think they're going to take a breather. The dollar is going to weaken a little bit. So, and that's not going to be a bad thing for the economy overall. But that's what I think the view for the dollar is. And that actually coincides quite well with some other charts. Like, for example, my favorite, you've seen this a million times, silver, which I've been long on. Yes.
Just a comment before you change from the dollar. You were showing the chart there, because I'm also always liking to, I'm always into looking at, candlestick events, but also like seasonality and things like that. First of all, I need to reiterate to people that the dollar topped on the second trading day of the year. Okay, we've talked a lot of times about seasonality, so I'm not expecting this year to be at new highs, no chance. But second of all, if you count the candlesticks there, you have seven consecutive black candles a month. As far back as I the DXY, the longest streak of losses on a monthly basis I have found is 8. Okay, and all of the times they produced at least a 3-month recovery. What I'm trying to say here is that even by looking back at the DXY chart, it shows that we are reaching, and actually the vast majority of the 8-month moves, consecutive moves lower I found in the past, actually I have to tell you that plenty of their candles were like very little candles. So I mean, many of the months were like barely suffering losses. In this case, from the 7 consecutive months we have, only one of them is like a little loss. The other ones are like big, decent candles. So I think that we're also reaching an extreme in a consecutive sell-off, a historical extreme. So I think that even if you look at it from this, like a rubber band effect, or you can call it what you want, I think that a pullback is a matter of at most a month to happen. And history tells us that after such a sell-off, even if if the move higher is going to be corrective, which of course after such a sell-off, my first expectation would be a recovery to be corrective and not impulsive. I know that Gregor has a different view on this, so I'm saying it in advance. But I'm also of the opinion as he is that you have to keep minimum expectations. So when we actually get to see a pullback, I will initially be treating it as corrective until or if it proves otherwise. So I think that you should expect that when we see some kind of a reversal here, it's not going to last for a week or 2 weeks. It's going to last for at least 2-3 months. Yeah. So there will be money to be made being long dollar, and we are probably close to that period of time. And the other comment,
and we may also be close to a high in the treasury market here. I remember a long time ago I was looking for 130 TLT, and we're not that far away from that. That would take it back to the election.
Yeah,
so if we're going to have a dollar rally, it's got to be rate driven, in my opinion. I don't think it's going to be geo driven.
Yeah, and as Stelios said before, and even if you look at the rates at the moment, we went from the point that the market was pricing in like hikes coming down our heads, like consecutive hikes, and I don't know what else. Which we know back in the time we said, Stelios said as well that we'll take the under to that, because at some point, remind me, Stelios, at some point we had what, like four more hikes being priced in until the end of 18.
We had 3 in 18 and 1 and a bit in 17. So yeah.
So we had like 4+ hikes, and I remember back then at the webinar we both said like, I'm gonna take the under to that. There is no question about it. Yeah. But we came down from 4.5 to
half.
To half.
Yeah, to
so
under 1,
it's like when you are in the sea under heavy wind, and you have high waves, that you get the peaks, you get the bottoms, but the level of the sea is actually somewhere in between. We were at the top of the wave, now we are at the bottom of the wave, and the truth is neither A or B, it's somewhere in the middle. So as Stelios said, anything, a snapback effect of anything, like some good news coming in, inflation picking up, which should, but with a delay, do so, because the dollar has been weakened by 13% since the beginning of the year. That on its own, given the fact that US is an importer, is inflationary. Okay, so anything, any kind of trigger will immediately cause this sell-off to reverse. Why? Simply because, let's say that you were the smart institutional trader or whatever, that you were short the dollar. Okay, and you're already like making a killing of profits. Okay, so at the first sign you're going to see that this might reverse, you're going to be inclined to say, okay, I've had a very good run with it, time to book it. And this kind of mentality brings big reversals. On the other hand, another comment I want to make about the dollar is the fact that I think that the dollar's move lower is not only the fact that we had overblown expectations, which we know that, but it's also a coordinated effort to push the dollar lower because the dollar's strength was causing issues. It was causing issues because, first of all, it was deflationary, globally deflationary. Second of all, it created stakes in the emerging market countries and currencies. And the fact I'm also saying, and this is not like a conspiracy theory, the fact I'm saying that it was a coordinated effort is the fact that suddenly you saw big central banks being a lot more, let's say, accommodative with their tactics to letting the dollar fall. And you're seeing some stupid statements that, like the IMF statement, which was, the IMF made a statement like a few weeks ago, and I forgot to mention that, which I found extremely strange. They said something ridiculous, which was like, the dollar is overvalued. And they said that like after we had like already 9–10% of a drop to the dollar from the start of the year. But they said the euro, the pound, the yen, and I don't remember even if they mentioned something else, are at fair value. So I'm asking here as an FX trader, how can the dollar be overvalued when the vast majority of the other currencies that consist the dollar basket are at fair value? I mean,
Yeah.
It's simply mathematically
Also, look at the week.
No freaking sense.
Yeah, look at the weekly note chart, guys, and you know, with the tremendous bond rally that everyone says we've had, and Steve, if you look at the weekly, I know you're going to say that's impulsive from the highs that we had last summer, and on the weekly, it still looks corrective, and we haven't even retraced 50% of that decline in the 10-year note. So, I mean, to me, it almost looks like a better short than the dollar being a buy because it's really been kind of a weak rally. So bonds have gone up, the dollar, and the bonds have gone up with a weak dollar and weak gold, which I don't know, fundamentally doesn't make sense to me. I mean, you know, do I want to hold 30-year, 10-year, 30-year paper in a depreciating asset? I don't think so. So interesting look in the 10-year note if you look at that chart on a weekly basis. I think there's a big short setting up. I don't think we're going to take out last year's highs in the bonds.
The move higher, as we have said, as we have said before, Dale definitely doesn't look impulsive. I totally agree with you there. I totally agree with you there. It doesn't. I mean, it's grinding higher and grinding higher and grinding higher, but it's not impulsive. I mean, this is not an impulsive move. The move lower was. This move is not impulsive. Any way you look at it.
Anyway, I think we interrupted Stel, and
he was about to go to silver, but you know, I wanted to make these two comments because they were involved. You know,
and we have time, guys. We have time because there's no guest today. Trent Orr, who helped us put together the rebate program for people. He's in Florida. He's been helping people board up their homes for a week. And I just want to put things into context that if you see what's happened to people in Houston and the Caribbean, and you talk about being stopped out of a trade, you have to be grateful that all it is, instead of losing everything and having your whole world washed away by the ocean, that we're really fortunate if that's the worst case scenario for any of us this week. If we lost a little money. What do you think?
Indeed.
Absolutely.
And also having to do with the dollar, I have to tell to people, because I see the frustration as well in the chat room, which is absolutely understandable. It's the frustration. We are currently at a situation that nobody wants to be short the dollar, because how are you going to short it here? You know what I mean? Besides, if you're a scalper, of course, I'm talking like about longer term trades. So nobody wants to be short the dollar, and it makes sense. I mean, you don't want to be short the dollar here. It's nuts. We already explained about the maximum sell-off that was 8 months. We're already at 7 months. Okay, so nobody wants to be short the dollar. But on the other hand, the dollar keeps falling. So it's, I know that people have been losing money trying to be short dollar. We've also made some attempts in ForexAnalytix, to buy the dollar, and it makes sense. But you need to be patient. You shouldn't give up now. I'm not saying that you should keep trying to be long the dollar, until you see like serious signs of a reversal. But I mean, I understand why this period of trading in FX is frustrating, because the vast majority of the, the major currency pairs are, of course, against the dollar, and the dollar currently is like trading like a piece of garbage. And, everybody wants to see a reversal to buy it, but we're not there yet. So, we need to be a little bit patient, and trust me, we've already started seeing like big titles, calling about, the big dollar fall, et cetera, et cetera, et cetera. I think we're getting close to a turn.
Yeah.
Go ahead, Stelio. You wanted to talk about silver?
Yeah. No problem.
Yeah.
So basically, silver, I keep looking at, I'm long that, and again, I kind of expect a similar pattern. That, I mean, I drew this line some time ago, a few weeks ago, and I think, sorry. Okay, I think this may coincide with a rise in the dollar, and then another leg higher towards $20-21. It's I've heard people say, how is it going to rally? There's not demand for it. Well, supply and demand of silver is actually, if you look at the grand scheme of things, it's actually relatively stable over the years. But as I say always, when you got money supply, credit supply, debt supply increasing at exponential rates, precious metals cannot stay at these levels.
And if it was all about demand and supply, Stelio, we wouldn't be seeing prices of 14 like just a few weeks ago, and 18 a few weeks later.
Yes.
I can testify that not much has changed during those 2 months, but we've gone from 14 to above 18 already.
And also the daily candles, all those things we've talked about many times before. It doesn't look like it's really genuine supply and demand trades. But anyway, that's a different story.
Yeah, and since all of them started being traded also in through ETFs, et cetera, the vast majority of the moves comes from bid and offer, and not actual from financial instruments in a sense, and not from the actual demand and supply of the metal itself.
Yes, and then again, also gold, similar story, I think, and they both coincide with some zones that I drew, as I said, over a year ago, and I think coincides very well with what I think the dollar is going to do. So that's just my view of gold and silver. And the other one I wanted to have a look at is the one I am long of, which is sterling Kiwi. I am bullish sterling in general. I'm also short euro sterling, as you guys know. I'm actually slightly out of the money in that one, but my strategy and my way of trading, I'm like 30 pips away or something like that. But anyway, so sterling Kiwi is something I think you guys saw this week when I was away, and it's broken out, and I think that's going to have a nice run higher as sterling picks up momentum, and as Kiwi, I think the Kiwi will remain under pressure. So I like this pair a lot, and I'm now putting my stops just below this zone, so like 77 or 76. So this is another one I'm looking at.
Nice.
And those are the ones I'm looking at. As I said, I don't trade and I don't look at a zillion instruments like Steve, the shekel or whatever he looks at. But these are the ones I really like, and that's what I wanted to have a look at. So,
Great
by the way,
stuff.
also Stephen is asking us what the DSI is. DSI is Daily Sentiment Index. We've said this before, but it's not based on positioning. It's not like COT. It's just a sentiment reading. So that's what it is about that.
Luca said that instead of sending Dennis Rodman, we should send Ivanka Trump to Kim Jong-il. might get more accomplished.
Maybe both together.
Okay, now this starts.
They could be playing basketball, and Ivanka could put on her cheerleading outfit.
Yeah. Okay, and it starts to resemble plenty of porn movie scenarios from this point on, guys. So.
Okay, over to you, Steve.
Okay, the first thing I wanted to talk about, and we had a friend talking about it here as well. We talked about it actually a while ago on the webinar, on the chat room, sorry. Let me take the screen. Is copper. because if you remember, Dale, we had been monitoring copper for some time now, and we had said specifically that copper is due. What did I do?
Yeah, you showed it early in the week that it started to look wrong.
It's the weekly, that's why. Okay, yeah.
On that first negative candlestick, you showed it.
Yeah, and look at this. We said, you know, we said back here, you know, exactly back here when we were testing the channel on the 61.8 that copper is obviously on another impulsive move higher, but you know, that's not the place we should be buying because we had the 61.8 and the ascending channel resistance. We actually broke above that. We retested the channel. We actually got an overthrow. We talked about it again like 2-3 days ago when we were here, and I said that, you know, I stand to my opinion that, you know, we shouldn't be trying to buy it here because, you know, some kind of a pullback, you know, should come sooner rather than later, and that will produce an opportunity. And today, finally, yesterday it was a warning shot because we had a hanging man candlestick, and today we're seeing follow through, and it's quite a big candle, one of the biggest we had, you know, in the recent days. So it is likely that this is going to trigger, you know, the corrective move lower. Ideally, I would want to see it down here, and then we can discuss about buying it again. So this one might also have some spillover effects. For example, in the Aussie. The Aussie did reach one more high, as you remember, I expected it since we were here, that, you know, it's either going to dip a little bit lower and it's going to push to new highs or push directly to new highs. And I said, you know, like 81, I would want to see 81. We did see 81. We actually even tested this. This was an ascending channel we were holding here. And the support kept being relevant. So I also kept the resistance, which, you know, despite having being overthrown there, acted nicely today as a resistance once again. Just a bit above the highs of the day, we also had the 127.2 extension of, you know, this little corrective move lower. So I put in on an update on the Aussie USD, you know, saying that, you know, it might find some resistance from there, and as it seems, we are getting a pullback here. So let's see what happens from here. We have a new week coming up. I want to also see how this candle is going to close, because to be honest, I'm satisfied now with the move in the Aussie USD. I mean, my initial expectations for one more push higher is now fulfilled. So now I'm not, you know, I'm open to the possibility of even failing up here. Of course, you know, it would be silly for me to say that's it, that's the high, etc., etc., etc. But I can tell you as a fact that if I see the signs of a failure, I'm going to be believing it. So, you know, I'm closely monitoring here and see what's going to happen. The Kiwi, on the other hand, you know, has been very frustrating to people. You know, I warned a couple of days ago. I said that I'm afraid that Kiwi is doing what it did to us back here, down here, which we were expecting, like this 68, 70 level to break, because, you know, it was very, very important, and it should have opened, like, you know, the doorway to much lower levels. It showed that it's going to do something like that, but it was you know, a fake attempt. And you know, in this case, we had a nice head and shoulders formation. We broke below the neckline. We showed continuation for a couple of days, and then we got this snapback. Okay, for the time being, somebody can easily read and interpret this as an A, B, C. Okay, so I mean, for the time being, somebody can still say, okay, this is corrective. We didn't even actually get to pass above this high here. But you know, I'm a little bit skeptical, because whenever I see like fake breakouts, you know, I'm very skeptical, because these usually catch the market completely off guard. So you know, today's rejection.
Yeah, I think I mentioned that the Kiwi was giving people to short the head and shoulders breakdown above it yesterday. So yeah, so
I remember that.
You got a better entry than the break. Yeah.
let's see, some people, actually, we already have two of our friends here asking about the pound CAD. And I'll tell you guys, what I have about the pound CAD is that, and I actually tweeted it out the other day on my Twitter account, that, you know, this was a major level. This was a great trade. I had actually taken that trade, and it was very nice because I liked that false break we had there. And then I was monitoring. I didn't take a long here. That's not my style. But I was monitoring at this channel back then, and I had, you know, I had drawn this. And actually, when we broke above the channel, I went long to this. But then it failed spectacularly, and it kept, you know, it kept respecting this channel. And we are seeing, perhaps, you know, it depends on how you draw the line. So, you know,
yeah, nice candle today.
Yeah. So, you know, we're seeing from this important level like a very, very nice reaction higher. That's very, very true, because this is an outside white candle. This is a very bullish sign. But on the other hand, you know, we had this low here at 160.20. So is this a very nice candle? Definitely it is. But on the other hand, you always need confluences. An example of that, and I'm going to briefly change the pair, is this, is Euro Pound. Yesterday, I said that this is forming to be a Euro Pound morning star formation, and I'm gonna book my profits as it looks, you know, and call it a day. So at the end of the day, we had this little pullback, and I put my stop loss above, you know, the day's high, honestly believing that 90% chances is that I'm going to be stopped out today, because morning star formations, these three candles here, are usually, you know, quite potent reversal candles. I mean, they're quite reliable. So I did put in my stop loss above there, but I honestly believe, like, okay, it's like a 10% chance that this is going to be rescued, and it actually did. So what I'm trying to say is that it doesn't mean that just because you saw a very powerful candlestick or candlestick formation, that's it. That's why we're always looking for confluences. So the same deal is here with pound CAD. Is this a very nice reversal candle? Yes, it is. Is it on its own enough to tell me, okay, that's it? If it closes above yesterday's high, I'm going to be buying it. No, it isn't. For example, we have this area here, like 160.20, that, you know, acted as support here, 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 here for at least 4 days. So first of all, I want to see a close above that. Okay. Second of all, if we go down to a 4-hour chart, which I'm bored of doing now, I'm into switching screens, etc., I'm going to tell you that definitely you will be able to see this kind of a formation. Okay, so somebody can interpret this as a descending wedge as well. So what I would want to see to have confirmation here is something like this. And if we get this, then you might want to take like a half a position and then see if you're going to get this. I mean, a break of the descending channel that has been holding out very nicely for the past 2 months. So you can approach this by scaling in. So for example, you really love it here because you see this kind of a reversal and the potential false break. Sure, go ahead and take like a little position with a stop below the lows. Then will it break above the descending wedge? Add a little bit to it. Then does it break above the descending channel resistance? Add more to it. Okay. So that's what I think about the pound CAD. It shows some potentials, some potential, but it's quite early yet. Now, having to do with the euro pound, since we mentioned it, today's candle is lovely because it looks like it's going to completely eradicate yesterday's signal, and it's going to resume lower. So in this case, the next target remains, the ascending channel support, and below that, it is very, very likely that we're headed for I think the 90 level. So one thing at a time, but it's working out nicely for the time being. Now, having to do with the cable that has taken a lot of people by surprise, I have to say that I'm not really surprised. I didn't have a clean bias to it, but my clear bias on cable was up here when we failed the descending wedges, that it's not going to hold the 130 level and it's going to at least test the 128. It did that.
Yeah,
But
we got
after,
the low right. Got the
yeah,
low right.
we got the low right, but I have to be honest, and I said it plenty of times here, I didn't know what's coming from there. I mean, we saw the move higher, but I didn't know, will the 130 hold and give us like a 1, 2, 3, so a new impulse lower? Will it just, this prove to be just a correction to the move that started from the lows here, or anyhow, I can't call this move impulsive, so that was a mistake. Will this prove to be another leg higher in this, slow drift higher? I didn't know. I honestly didn't know. I had no bias. I had no bias. After though we broke the 130, this market at least has been very honest and clean with us with levels. After it broke 130, I had no resistance level here that was of importance until the highs here. So to be honest, I'm not like too much surprised that we're pushing to the highs. Okay, let's see what other questions we have. Greg is very stable, yes, and you know something? Let me show you what Greg is thinking. V has mentioned that. Actually, let's have a look of what Greg is seeing. And I have immense respect for Greg. Greg is one of the best traders I've seen. I mean, he's an excellent Elliott wave trader. Okay, so yeah, as you see, Greg on the daily was looking for a failure. It was actually the first scenario said that, I was also thinking that this might be like a 1, 2, 3, etc. And I can tell you something from an Elliott wave perspective, because I do Elliott waves, not at the level Greg does it. I just, I use it as well with other methods. Even having gone as high as we have, still this does not. Still that does not invalidate the possibility of that being a wave 2, because a wave 2 can retrace as much as it wants from wave 1. Okay.
100% sometimes, can't it?
Almost 100%. So even if it fails from here, it still doesn't invalidate the possibility of this being a wave 2 to a new impulse lower. But on the other hand, it seems quite strong to me. Oh, here he is. He updated it actually today. He always does. So from what I understand, what he thinks is the following. He thinks that we had an A, a B, and the C wave obviously being a 5-wave move, because it's clearly here a 5-wave move. So he still believes that we might get a failure, and he also has a confluence up here. Just it seems to be like at around 130. I would say it's around 132. He also has that the 132 is going to be where the wave C is going to be 161.8 of wave A. So Greg is still a believer that it's going to move lower, and it might do so, because as I told you, as I told you, I still don't have a clear bias about the pound. I'm really perplexed about it. I knew that I liked Euro pound up there, and that's why I took the trade. But as I said, if you remember, Dale, even as I said back then, I was still unaware if that's going to end up being a product of Euro dropping, or it's going to be, or it's going to be just showing
pound
different amounts
outperforming on the upside.
Exactly.
Good stuff.
Okay, let's see if we have any more questions. Sir, I'm long-term investor. Please guide me how I can see gaps on chart. Whether I go in direction of gaps or other way, just thumb rule. Okay, Amit. Gaps. Okay, listen. Gaps. The market has. Okay, I'm going to leave actually this question for last, because it's more theoretical and people might. So I'm going to answer this question, Amit, after we go over some charts. Will you take a look at pound yen? Yes, sure, we can have a look at the pound yen. Okay, pound yen. It's not it's not by accident. I mean, it obviously makes sense, the fact that before I go to the pound yen, I'm going to go to the USD yen, and I'll tell you why. Because first of all, it's a product of the pound and the yen. So, you know, I want to have a look at the USD yen. And here I want to remind you that, you know, I said that, you know, this is a manipulated market, but anyway I saw it, it showed that it wants to move to 106. So obviously nothing has changed with the USD yen. I mean, I find no technical pattern here that tells me, ooh, you should be long. Perhaps there is some kind of a harmonic pattern, because this is the only methodology of technical analysis that I'm not actually really following. So perhaps this is some kind of a harmonic pattern. I don't know if any of our friends here are trading harmonics, but I can also have a look at mixed trades. You know, other than that, I see nothing that says that we're not going to test this area, okay, which is like at about 106. So nothing has changed with that. So I have no reason not to be still bullish the yen. But on the other hand, as I said before, I'm perplexed about what the pound is doing. So I can tell you that I would have no position here, but obviously, and that's what I'm writing in my analysis as well, we had a major break below this long-term triangle, okay? And as long as we're not breaking back above it, you need to remain with a bearish bias. So to me, you know, this looks like a bull flag on the short term. I have to admit that. So, you know, the possibility of another leg higher from here,
Yeah.
perhaps a retest.
A week ago, we were hoping for a back test of the breakdown line. Now it looks feasible.
Yeah. So
You know.
something like that looks probable. You know what I mean? Even a failure from here looks probable, because as you see, all these days we have actually been trying to close above the 200 EMA. We did it only one day here. Falsely, we broke down below it. And anyhow, for me, it's all about the 144.70 level here, because, you know, it's going to be the confluence of this broken ascending trend line and, you know, this horizontal level we have there. So I would say that it looks like it might want to make another move higher before then going lower. So that's how it looks to me. Okay, that's what I see in the pound yen. Nikkei. Chris, yeah. If Chris is asking Steve, just on the cable, Grega has end of wave C, but we have impulsive price action. Can we really expect long-term bearish move from here? Yes, listen, Chris, we can, because we have had now a 5-wave move higher, but you know, C can be a 5-wave move as well. So in an ABC correction, you might have like one of the two waves, A or C, being a 5-wave move higher. So theoretically speaking, yes, it's still probable. It's still probable. So let's have a look at the Nikkei. Okay. Nothing much has changed with the Nikkei. The Nikkei has broken, as we had shown back then, broken, retested, and, you know, drifts lower from this ascending wedge. You know, the next area of interest that I see is 19,000. And, you know, we made an attempt to recover here. We never actually managed to break above these highs. So I do think that we're going to go to 19,000. And I do think that if we actually then break the 19,000 level, because this is also the confluence of the 61.8 of this move higher, and it's also, if you zoom back, it's also an area that has produced, you know, it's a demand supply area in essence. So I think we're going to 19,000. That hasn't changed, and I think that if we break about below 19,000, Nikkei is going to be in serious trouble. That's what I think. Michael is asking about crude. And we had this discussion today on the chat room as well. By the way, I need to remind you here, guys, that the chat room is going to be open to people that have been with ForexAnalytix for more than 6 months, or to people taking semi-annual and annual plans, since next week. The software integration is almost done.
Show them what it looks like, Steve. I have it up.
Sure.
It's pretty cool.
Sure. Let's have a visit to the Jumbotron.
So I've been hanging out in there the last 3 days, and there's some great collaboration and some very good traders in there. So you could see, all of us are in there, and then it's going to be a good place after.
As you see, we're sharing charts, we're sharing ideas. Sometimes we're talking about irrelevant things to the market. This is a very, there you go, Jumbotron, good morning all. Sold my house to buy Bitcoins. Hello to the world, etc., etc., etc. Sometimes, it's a very friendly environment. Sometimes we talk like things that are irrelevant to the market, but, we do quite a lot of chat sharing. We discuss ideas. We share trades, scalps, etc. Because, we have all kinds of traders in here, like from scalpers to long-term traders. So, it's a very, very nice community, which, we're very proud to have here, for a period of time. And, now we want to integrate like longer-term clients in here as well.
Great resource, guys.
Yeah, it is a very great resource. Now, you are asking me about crude, and I'm going to tell you something about crude. First of all, so far today, crude is producing an inside day to an inside day. Okay, that's rare. Of course, it's early in the day, but that's rare. Second of all, this does not look bearish. This simply looks like a consolidation, which should break in the direction of the recent trend. The recent trend is higher. So do I think still it's bullish? Yes, I do. Yes, I do. I mean, it would be a surprise to see an inside day of an inside day break against the recent trend. Okay, anything can happen. This is trading. But, statistically speaking, yes, I believe that this range is going to break to the upside. Okay, so that hasn't changed. William is asking, yeah, I need to add that. For you guys that are going to be eligible to that because you're going to be long-term subscribers, etc., you won't have to do anything. That's why we're doing the software integration. You will simply find when this is ready at some point next week, and of course we're going to announce it, you're going to find a new button when you're logged into ForexAnalytix that is going to give you the ability to log into the chat room, and the system is going to automatically log you in because since you will be already logged into the ForexAnalytix platform, it's going to use that credential to get you in the chat room. Okay. Also, I need to tell you that many of you might not have gone into it. In settings, in the settings of our platform, you have the ability to upload an avatar. You always did have. But of course, since you were the only ones that could see that, I'm guessing that many of you have not used that. But you might want to use it now because this same avatar is going to be used in the chat room as well. And it's nice if in the chat room you have an avatar because people can easily learn and distinguish you from the rest. So I think it's a good opportunity if you also upload an avatar there, and everything is going to happen automatically. So you're going to be pressing on the settings wheel. Let me show this actually. So you're going to be pressing on the settings wheel here. You're going to be pressing on the settings wheel here, and where it says general settings, billing settings, etc., you're also going to have a new button saying chat room, join chat room, and the chat room is going to be opening in a new tab. Okay, and the system will automatically log you in. So yeah, we covered crude. You sent me a harmonic. Yeah, let me see, mate. Gwen has sent a harmonic pattern on Twitter that is actually bullish. Let me see. And he says, he doesn't he quotes somebody else, Grandmaster. Yeah, but he never says what kind of a pattern it is. Sorry, I don't know from harmonics. I'm going to show it to you here. Okay, it's this. So I don't know what kind of harmonic pattern this is, but anyhow, this looks to be some kind of a bullish harmonic pattern. Okay, let's see it played out. From a technical perspective, I still see 106 being the next serious level of support. So unless I see something different than that, it's a crab. Okay, thank you, Vamsi. So this is a crab. So this is a crab pattern in harmonics. Okay, so harmonics have a crab pattern there that point higher. Okay, I'm very, very skeptical. I want to see it play it out and we discuss it from there. Aussie Kiwi, sure. Aussie Kiwi. And I haven't forgotten the question about the gap filling, by the way. Okay, Aussie Kiwi. Aussie Kiwi started the move higher by an inverted head and shoulders. We had pinpointed that. And since then, it has been breaking one level after the other. It has broken out of this triangle. This move is clearly impulsive, at least in the short term, and it's very nicely channeled. I think that at the very minimum, we're going to 113, and nothing has changed here. We might see some kind of a corrective move back to retest this broken trend line because, nothing moves in a straight line, but I see absolutely nothing to worry me that, this isn't going to happen. Okay, any other questions? Retrace number of the entire down move on cable. Okay, let's have a look at this briefly. So you mean, actually we might want to go on a weekly for that. So you mean, there it is. 38.2, we've already broken above it from this high, okay, which was like the Brexit high. Now, if you're talking about this high, because don't forget that cable has been in a very, 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 very long-term downtrend. So if we do this, it's going to take time to populate. You see, at some point it was back above 2 with the dollar. Okay. So, but I'm guessing you're asking the 38.2 from which high? From this high is, we already said we've surpassed it. Now, if you're asking from this high, it comes at 139.25, which also more or less coincides with this area here, that low. But I think, that's a too far-fetched thought. Short has okay. Crap. Okay. So having to do with gaps. First of all, I would advise against trading just simply on trying to see gaps filled. Okay, because there are different kinds of gaps. First of all, there are the so-called runaway gaps, that the market gaps and doesn't turn back to retest the gap for a huge period of time. On occasion, it can be years. But the general theory for the gaps is that the vast majority of the gaps are being filled like soon. So there are a lot of people that, especially, for example, Sunday night gaps. So, usually when without having much of a reason, you see like a market opening with a gap on a Sunday night. Let's say the gap was higher, they're going to be shorting it with a target to fill the gap, or if it was a gap lower, they're going to be going long to fill in the gap, before perhaps the move resuming lower. So on the short term, and for short-term trading, trading to fill gaps when especially you get gaps without any strong event happening, and without the trend being clearly in the direction that the gap is going, is a viable option. So it can be one of the techniques a trader is going to be using. But trading simply on the idea that you can make a living trading gaps one way or another, I don't think so. So you need to develop like several kind of trading techniques and setups that you like, and one of them can be trading the gaps. Okay. Now, on a gap by gap basis, we're very happy here. So whenever you see a gap, you can ask on the webinar, and we can immediately give you an opinion what kind of a gap is that. For example, a recent runaway gap was the one we got in the euro. after the French elections. So it's, let me show you, it was this one. It was this one. Okay, so the 108 gap might even take years to fill. Okay, personally, I don't think we're going down there anytime soon. And we said it since back then when we actually tried to fill in the gap and we never did. And then we had this move higher. I mean, this is a runaway gap, for example. If somebody had shorted the move here to fill in the gap, they're still holding short, and we were at 108 something, and now we're above 120.
Yeah, now the gap is between their banker and them.
Yeah, that gap has created a big gap in their trading account.
Their mortgage company, whoever's holding their mortgage, yeah.
Yes, exactly, exactly. So anyhow, could you please analyze a pound Swiss? Yeah, let's have a look at that and wrap it up. Pound Swiss. Okay, there's nothing much to analyze currently at pound Swiss, and the reason is the following. The reason is because we're in a triangle at the moment. We had a failed attempt to go below it. We didn't. So to me, things are very simple here. I wouldn't be doing anything unless we break out. But if we saw, for example, a break from here, I would be very interested. Very interested. Okay, or a decisive break below here.
Yeah. So you would say symmetrical triangles normally are continuation formations.
Yes, normally are continuation formations, but
Okay.
but look at this, and look at these guys, and look why you should never get involved with something like this if you're not trading short term, of course. The RSI is currently at 52, so like down at the middle, okay? The 50 and the 200 DMA are in essence horizontal. What does this show us? That this market has completely died down. It has been doing nothing since here. I mean, it has been chopping around, and that's why it's also a symmetrical triangle, as Dale is saying, and the market is doing nothing. So why would I want to take a position if we're talking about a medium to long-term position in a market that's completely flat? Every kind of indicator you see is going to tell you that this market is flat at the moment. You know, it's doing nothing. So let's wait for it to start doing something, and then sure, it can produce an opportunity. And to be honest, it can produce a good opportunity, because on occasion, markets that completely
compress because of compression that's building.
Yes, yes, it's building a compression, and at some point when this market wakes up, people are like, oh yeah, you know, look, this looks good, and you might see like a breakout of this triangle, and suddenly, boom, like big moves coming, but we're not there yet. Okay, everybody have a lovely weekend. Thank you, Dale, and we'll be here on Monday again. Dale?
Yes, sir.
That's Stelios, and that was a Baba.
It's me and my daughter. Sorry. Yes. Thanks, everybody. And
Welcome.
have a great weekend.
Dale, we
I
can
don't
hear you if you're speaking, by the way.
We're going to wrap
Yeah.
it up?
No. We couldn't hear you. We didn't know if you
okay.
were here. Okay,
Yes,
now we can
that's
hear
the
you.
way
You wrap it up.
Okay, guys, so do your work over the weekend. There's some great work today by Stel on his macro stuff. I love his macro stuff. I'm kind of an astronomer. So, and Steve, I'm telling you guys that the input you get on an educational level as well as actionable analysis, I've been around. I'm an old guy. I've seen a lot. Hiya, Brooke. How are you, BW? And that if you're serious about becoming a professional trader, that ForexAnalytix is going to provide you with a great platform for you to build a foundation on solid ground and not sand. And hope everyone has a good weekend. To our friends in Florida, that perhaps there's a reversal of the flow of this hurricane and as little damage as possible. I have a lot of friends in Florida. I have a friend in Puerto Rico, and let's just hope that they have the strength to rebuild if they have to. I know even in our lives, there are floods that happen and we all have to rebuild. So really enjoying working here with this team and working with each and every one of you. Hope to see a lot of you in the Lake Morrow Country Club next week. And have a great weekend. You know, enjoy life and count your blessings that you're not in the way of some type of natural disaster. Money comes and goes. Time is gone forever. Make it count. And most of all, I hope what you learn here is that the difference between pros and amateurs, because we're not always right in here, is that pros know how to lose, so they have money left to be right with. Have a great weekend, my Trading Warrior brothers and sisters. Steve Volge, Stelios, Blake, Grega, Nick, and look forward to killing it with you guys next week. So there is a theme that we hit on today, and we're going to be definitely looking for signs of some type of turn in the dollar for at least some type of reaction. And I really do believe that Stelios's arrows that he drew today are a realistic possibility. So, you know, if we missed and you feel bad because you missed the downside in the dollar, don't worry about it. There's another trade setting up every day, every week, every month. Get used to and accept that you're going to miss trades and say that's okay, because there's always another train around the corner. And don't forget, count your blessings, not just your pips. And I look forward to working with everyone. We all do. All the hedgies will be back from the Hamptons, and I expect some really a lot better action next week now that the summer is officially drawing to a close. So enjoy your weekend and see everyone on Monday. Thank you very much, Jean. And Steve, have a great weekend. Stel, Blake, and I'll be talking to you guys on Monday. So enjoy your, you know, enjoy the football, enjoy your life. If you made some money in the market, pull some money out of your account and be good to you and those you love, because otherwise it's just a digit. Make it real. Adios, everyone. See you, Luca.